Welcome back to Morning Trade Live. It's time for Chartmaster, where we take a closer look at names reporting their quarterly numbers on Friday. That'll be before the opening bell on Friday. Jenny Horne will take us through some of the fundamentals, and Rick Ducat will take us through the technicals on these names. So far, it's been a winning week on Wall Street. The Nasdaq's up about 1%. Tomorrow, we're closed, and Friday, we get more action. Let's talk about Kroger, which has been a winner this year and has had that merger with Albertsons. Let's look at what to watch for here in this name, Jenny.
I know. I think it's been so interesting the way that breakup has played out, because I mean, like, the two of them have really been going like head to head over, like, you know, who was the accused, who was sort of the one that walked away from some of the deals. So at least as far as that drama, I think we finally put that behind us. But a pretty stellar chart, all things considered. Actually, even the longer term picture looks just as strong. We are expected to see the first quarter results on Friday, June 20th. Analysts are anticipating earnings of around $1.46 a share on revenue of $45.3 billion, which would indicate about a 12% year-over-year increase on earnings, while relatively sales showing some flat estimates when comparing historically. Historically, we've also seen Kroger stock rise 55% of the time post its earnings announcements, with a median increase of about 5.5% in just one single session, while the maximum observed is a jump of around 12%. So all things considered, I think that you could say safely you have the odds on your side, at least here, when betting that Kroger will make a nice move to the upside. So we do know that back in fiscal 2024, same-store sales increased by about 1.5%. Gross margin also improved by about 50 bips to around 22.3%. However, adjusted earnings for the fiscal year still contracted about 6%, as they do focus on stabilizing their performance, but also these higher margin private label products, enhancing their digital platform, and really starting to build that in-house advertising platform and health services. So again, after the collapse of that merger with Albertsons in late of 2024, Kroger did declare a new buyback of around $7.5 billion to generate some of that earnings growth. So I do think there's still an unpredictability to this retail environment, and I think that will definitely be of note. But as we know from a lot of these grocers this past quarter, Walmart being one who has kept their prices relatively low, even said, hey, if things change or evolve is a better way to put it, we could see some price increases. So we'll have to see if Kroger will follow that line of thinking, or they'll go with the Home Depot and Lowe's, with both of those names in the same week where, like, we are not raising prices. So I'll be curious to know what route Kroger takes, and of course any guidance on the foreseeable future, although murky, what they say will be hugely important to its price.
All right. Look, what do you think about this chart here at $66 today, Rick? What are the technicals telling you?
Well, pretty steady climb to the upside here. It's given back some of the gains recently, but still, we are up about 35% or so off of those 52-week lows that we established almost a year ago, all the way back here near the $49 level. From this earnings event here, where price touched on the purple 252-day EMA, we could draw this trend line going up across the lows, and more recently has been broken. Now we find ourselves in kind of a no man's land here, because our shorter term downward sloping trend line in blue there has also been breached. So now we don't really have a very clear trend line to follow. We do have our moving averages, though. Our yellow 21-day and orange 63-day exponential moving averages line up pretty closely with our old trend line near about 67. So the old support could now be new resistance, especially since it lines up in confluence with these other two indicators. To the downside, recent lows, our green line here near 64, represented a floor that price could find some support at. For now, though, we can also see that RSI has invalidated its downward sloping red trend line there. But as we head into earnings, this could be a major catalyst that could rewrite that story. If we were to look at our volume profile and standard deviation channel studies, we can see that price is quite close to the point of control, the area of heaviest trading. So this area, 65, 64, is key to hold. That's important downside support. To the upside, volume picks up again near the 72 level. So if we were to take out these old highs near 70.32, there would be another potential hurdle right above.
All right. Thank you for that. Appreciate it. So, and Albertson says it's not for sale. Don't even look to it. That whole thing fell through, as you noted, Jenny. And I think they're done for now as far as that. Let's take a look here now at the next name. Before we get here, we're looking at Darden Restaurants. So the shares are up nearly 50% over the last 12 months. Your thoughts?
Yeah, this one has been also, I mean, like an amazing one to watch. You talk about like carving out a really strong niche in the food industry, especially one that has remained, I mean, relatively challenged, I would say, especially considering pricing. This is as beautiful of a chart as any. I mean, so what has been hugely, I think, important is the fact that they've actually kept relatively positive comps. They've also been able to continue to adjust their overall, I mean, like offerings to continue to have that affordability. So this name does have more than 1,800 restaurant locations in the United States, and it's a massive, massive change for that very reason. Olive Garden has been this name's, I mean, like true, no pun intended, bread and butter, as it now makes up roughly 50% of their sales. So that is as important as a brand as basically the entirety of Darden. What they've done so well is if you look at the prices of their average ticket size, and I always mention this whenever we talk about Olive Garden because it's frankly amazing, but their average cost of a meal per person is $22, which is slightly higher than where it was. Like I looked at pre-pandemic levels, so like we're talking 2019, I mean, it was around $19. So yes, it has gone up, but what the brilliance of that is it still makes you feel like you're getting a good deal when you already are paying a few dollars more for each item at the grocery store. I would say that a relatively affordable meal at Olive Garden is a huge, huge win and continues to drive so much of that consumer growth and that consumer happiness and that loyalty that restaurant chains right now are so desperately seeking. So pricing environment will also be huge to them. I mean, they're not going to be tariff immune, as none of these companies really can be that do have so much food exposure and cost exposure. But as we know from looking, gosh, at like CPI and PPI last week, inflationary reads have actually come down. I mean, we're seeing things move much closer to the Fed's 2% target than I think many were fearing. So it's still about the consumer's willingness, but it's also about the inflationary pressures and the tariff concerns that all do weigh on a company that is as exposed to the consumer as Darden is. But I mean, a beautiful chart, so you would never know there has been any degree of pessimism or concern just based on the technicals here.
Yeah, I mean, the Olive Garden momentum, there's a lot of expectations there. As you noted, the chart is a good one there. 1 year up 50%. Rick, some of your thoughts on this name, because the analysts, while some have higher price targets, many are at or around the current price.
Yeah, actually a chart that looks pretty similar to Kroger, but perhaps even stronger. We have a similar low point almost a year ago, and then a fairly steady uptrend. This one's a little bit messier here. We had some breaches of this blue trend line here a few times, but for the most part, when you do these trend lines, it's subjective. We kind of just try to find the line of best fit going along the closing prices here. The intraday prices are still worth noting, but not really as important as where things settled for the day here. Nevertheless, if you were to look at our longer term trend line, you can see that price has started to move beyond it here. You could draw this even steeper trend line, starting with our tariff news lows, connecting these subsequent lows here. And you can also see that the 211 level, an old ceiling here that was tested twice, has now been broken. We did also retest it just very briefly before continuing to the upside here. So a little bit shy of those new highs that we established yesterday, but not really giving back too much ground at all so far. RSI also following pace with price, keeping its own green trend line, backing off a little bit from its entry into the overbought area. If price were to make new highs and close in the overbought area for the RSI, that would be another bullish signal. Overbought RSI in a trending market is typically regarded as a sign of further strength to come. Now, if we were to look at volume profile, we can see right here gives us a convenient supportive area to keep an eye on here. It's a volume node. It's our 21-day exponential moving average in yellow, and it's our blue solid line here, the linear regression line, the line of best fit based on closing prices for the year. So right around 216 would be a downside area to watch on the road to that floor near 211. If we were to move to the upside, +1 standard deviation from our linear regression line comes in at around 238.50 right now.
All right, thank you for that, Rick. Last but not least, we look at CarMax. We had Garrett Nelson on the other day, and he actually likes CarMax. I saw some of the analysts have some price targets that are higher. RBC thought sales were probably looking good. What do you think here as we look at the CarMax story?
Yeah, I do think that as far as if you look at the first quarter estimates and beyond, right now we are expecting about $1.22 a share for earnings. That would reflect nearly a 26% increase from last year on revenue expected to also climb about 6%. And over the past month or so, we've seen earnings only estimate or revise to the upside about 0.9% from prior levels just a month ago. And as right now we know, as far as revisions go, it's only been more encouraging to see some of these areas of growth, like their wholesale vehicles are expected to reach about 1.3 billion. That would indicate a change of around 5% year over year. We're expecting about 6% growth in their net sales, and also we're expecting, based on used vehicles, those net sales expected to rise about 6.5%. We also do know their extended protection plan revenues expected to jump about 9%, and the number of total stores expected to rise of around 251 stores compared to the current estimate. The company reported about 245 in the same period a year ago. Revenue per vehicle retailed, which will reach around 26.8 thousand. That would be actually slightly ahead of what we saw a year ago. Again, so we're seeing the average right now price per retail vehicle slightly in uptick. And I do think that right now we've seen a lot of analysts say, hey, in light of right now a difficult, challenging auto market where a lot of these foreign suppliers and foreign manufacturers are going to be hit by tariffs, these names that are able to keep their supply and their inventory a bit longer, like CarMax, for example, that has a lot that can fit, a relatively large amount of inventory, can prolong some of these price increases, thus driving you to go to CarMax because it's giving you what you could perceive as a good deal. So, I've seen nothing but more so and more these analysts come in and say like names like CarMax, Carvana are going to be a bit more insulated. Not to say there won't be a tariff impact, but I do think that favorability has been very well echoed by the sell side. So we'll have to see if it can, of course, translate into some results and some guidance that's able to say, hey, perhaps we are going to be relatively a bit more resilient than some of our automakers. If you're buying a car outright new, there's definitely tempting to be some benefit to perhaps purchasing used or purchasing through a third party like CarMax.
All right. Well, we'll have to watch what the catalysts could be for this name in the meantime. Rick, what do you think of the chart here today?
A chart that tells really quite a different story than our two previous stocks here. We can see in this case now the trend is down. We had a high point here. We failed to take out those old intraday highs, though we did make a higher closing price. But then, like many other stocks around that point, we fell off. We hit our lows near that tariff news cycle that were roughly around earnings as well. From there, we did hold the bottom near 61.50 or so. We did make intraday lows beyond that point, but for the most part, that's the line in the sand. That also gives us about a $10 wide range here. 61.50 to 71.50 is kind of the highs and lows here. It was a low point before our gap down, then it was the high point after we established the gap down here. Never really been tested again yet either. So 71.50 is a notable upside level to watch here. RSI showing sort of a triangular shape here, suggesting declining momentum, declining volatility, a bit more of a bearish lean right now. Especially because also prices below our moving averages here, they're all trending downward as well. So the bias in this case from these technical standpoints would be more toward the downside. Other maybe not great news if you're bullish is that price is still below the volume profile point of control, which is at a quite low point on our chart here. Oftentimes this can be interpreted as a sign that perhaps a significant bottom is in and that it could be an interesting opportunity if you had a bullish outlook. But take a quick look at our 5-year chart as well. You can see our long-term volume profile point of control is near 70. We're below that point once again. Just kind of not really looking quite as great here. We're near another significant low point here, near about 60, after we broke through this longer-term trend line as well. So it kind of depends on your time frame and your perspective, but overall a more bearish read.
All right. Rick Ducat, Jenny Horne, a good look at 3 important names ahead of Friday's reports and news. So thank you for that. That was fantastic looking at those names. Thank you.